New day, new tape. Let's read the tape together. 3 sessions, 1 verdict. On Tuesday, the Nasdaq bounced off its long-term line. On Wednesday, it broke below it and the panic was real. Yesterday, the tape did something important. It tested the line again from below, held it, and bounced back above. The Nasdaq added 2.8%, QQQ 3.3%, both on elevated volume, both closing back above that long-term lines. That's a shakeout, not a breakdown. And it tells me the long-term line is real. But there's where I stop the celebration and start the discipline. The bounce printed clean, the long-term line held. The close finished near the highs of the session, volume was elevated. Nasdaq traded for roughly 8 billion shares, QQQ over 66 million, both above the panic day volume. That's a real bid, not a dead cat bounce. The pattern is the same one we saw earlier this month on the broader index. Undercut, test the line, reclaim on size, that's all a shakeout. Here are the 2 levels that settle whether the bounce continues or pauses. First, the short-term trend line. On the Nasdaq, the line sits near 25.372, on QQQ it sits near 694. The bounce has to clear those levels and close above them, or this was a head fake. If it clears, the bounce becomes a strength. If it stalls and rolls over, the long-term line hold was a bull trap, and we go back to watching the long line as support. Second, the midterm line. That's the next major test if the short-term line clears. Nasdaq near 25.740, QQQ near 707. Midterm line is where the bigger money decides whether the rotation back into growth has legs. Volume tells the truth here. The bounce came on roughly 8 billion shares on the Nasdaq and 66 million plus on QQQ. The panic day printed about 72 billion on the Nasdaq and 57 million on QQQ. So the bounce day traded more, not less, than the panic day. That's force covering from the same flow that sold on Wednesday. Plus the patient capital that sat on the bench finally getting the entry waited for. Scared sellers plus patient buyers is a tape that brings conviction on the bid side. The volume signature matches the price action. Real bid, real hold, real chance, a continuation. So here's my read, plain. The long-term line held the test. The bounce is real. But this is still a bounce, not a trend, until the short-term line gets cleared. Sorry. I'm not calling a bottom in the whole market and I'm saying the AI trade is back. I'm reading the tape and the tape says one level held, one level is next. Watch Nasdaq 25.372, QQQ 694. Clear on those volume and the move has legs. Stall there and the long line hold was just a pause in a bigger decline. The tape always tells the truth, but it tells it one candle at a time. So here's the homework for you. Don't refresh the headlines, refresh the 2 levels. Nasdaq short-term line at 25.372, QQQ short-term at 694. If both close above those, the bounce became a trend and you can engage with C's. If one or both fail, the long line hold was a bear market rally and the next stop is the lower rail. Nasdaq near 24.306, QQQ near 648. And here's the part most people skip. The midterm line near 25.740 on the Nasdaq and 707 QQQ is where the bigger money gets serious. The short-term line tells you whether the bounce has legs. The midterm line tells you whether the move becomes a real rotation back into growth or just a relief rally that fades. Don't trade the midterm line first. Let the short-term line get cleared, watch the follow through for 2 or 3 sessions, and then add on strength near the midterm line, not on the chase. That's the tape reading process, one level at a time, in order with patience between each. If you try to do all 3 at once, long line, short line, midline, you will get shaken out by the noise between them. The tape rewards the patient reader, not the frantic one. Same time next session, let's see whether the short-term line gets cleared next. Stay safe, trade safe, see you on the next one, can't wait for it.